this is a chart mapping. So first of all, let me just say I'm extremely bullish on Bitcoin longer term. Okay. I think it is going to 200,000. That hasn't changed. I think last time I spoke to you, I thought it would be there by now, and it's not. It's at 100. But this chart here is very interesting because what it does, it shows you. So the yellow line is the price of gold, and the orange line is the price of Bitcoin. And if you look at the left-hand scale, that's the Bitcoin price. Okay. If you look at the right-hand scale, that's the gold price. And so the scales are different. This is interesting to note. Notice how they generally have tracked together, but also notice how the scales are different. So while gold started this chart at 1,500 and it's gone to 4,000, Bitcoin started this chart at 10,000 and it's gone to 100,000. So gold's gone up, 3x or a little over 2.5 to 3x, and Bitcoin's gone up 10x.
Bitcoin's rally has been strangely quiet, the kind of climb that sneaks up on people waiting for fireworks. While headlines chase other stories, price grinds higher, liquidity improves, and the old inflation hedge looks tired beside the upstart gold has held value, but market behavior hints at a handoff. The signal is consistency, not noise. As Lawrence Lepard frames it, the comparison is the story: put Bitcoin and gold on the same chart, and you see cousins that travel together, yet one sprints while the other jogs. Gold moving from roughly 1,500 to near 4,000 shows resilience. Bitcoin rising from about 10,000 to around 100,000 shows velocity. He stays bullish, seeing a credible path toward 200,000 as capital searches for harder money. The takeaway is practical. If the game is shifting from speculation to allocation, then time, conviction, and steady liquidity matter more than one viral day on a chart. Bitcoin is beginning to act like a store of value with upside, and that is a different conversation than a quick trade. The rally's quiet momentum suggests a fundamental shift in perception. Investors are increasingly viewing Bitcoin not just as a speculative asset, but as a viable alternative to traditional hedges. This sustained accumulation reflects growing institutional interest and a maturing market structure. According to Larry, the long-term trend, prioritizing scarcity and disinflationary properties, appears strong. This move is about deeper financial conviction, not just trading hype. Let's watch clips from Lawrence Lepard's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Well, right now, actually, I like Bitcoin more because it's behind gold. Look, first, let's just get some things out of the way. I love them both. They both have great characteristics, and they're both going to go much higher. And they're both ways of protecting yourself against inflation. One is more stable and has a longer history. That's gold. The other is more volatile, but can outperform gold and has kind of outperformed gold, although recently it's kind of been lagging relative to gold. And that's Bitcoin. And if you actually look at it, and I've been sharing this on Twitter, or if you go to my Twitter feed, you'll see this. I've been sharing charts that show that gold tends to move before Bitcoin. Particularly if you go back to the COVID example, in 2019, the repo market blew apart and, the Powell pivoted. And so gold started going up, and then COVID hit, and then Powell really pivoted and started printing like crazy. And gold really went up. It was pretty interesting because Bitcoin sat there flat for some period of time, a fairly significant period of time. And then, of course, Bitcoin woke up and went from 10,000 to 60,000 in a short period. So, gold smells out debasement quicker and more, easier, in my opinion. That's because it's more broadly held. But then Bitcoin, once everyone realizes the print is on, Bitcoin's pretty liquidity sensitive and it tends to run hard. And so if you kind of look at gold, has gone up quite nicely this year, and gold stocks have gone up even more. And Bitcoin's up, but not relatively speaking. It hasn't outperformed gold. It's been kind of similar to slightly below. So, my opinion is if you were kind of asking if you wanted to make a sound money bet today, which is on a relative basis cheaper, I would say Bitcoin because it hasn't moved yet. And a lot of Bitcoin people are like, hey, what's going on? Gold's going up and we're kind of flat. And my response to that is just wait. You should be happy that gold's going up because it means Bitcoin's about to go up next. There's some people who believe in this 4-year cycle, and we're kind of at the top of that 4-year cycle, and so they think maybe 100,000 is the top. I mean, it trades funny. It trades like a wild animal. You never really know what it's going to do. But I think we're going to wake up, and one day it's going to be a lot higher. And it's interesting because if you look at it historically, if you miss the top days, you really miss a lot. And so I wouldn't not hold Bitcoin here because I think when it does wake up, it'll move far and quickly. So while gold started this chart at 1,500 and it's gone to 4,000, Bitcoin started this chart at 10,000 and it's gone to 100,000. So gold's gone up, 3x or a little over 2.5 to 3x, and Bitcoin's gone up 10x. But notice that here's what I was describing before in the earlier days in 2019. See how there was the Powell pivot right there, and gold went up quite rapidly, and Bitcoin flat as it can be. Then COVID comes along in the first quarter in March, big shock, big print, gold rips higher, Bitcoin's still flat. Okay. And then one day, Bitcoin woke up and went from 10,000 a coin to 60,000 a coin quickly. Okay. Then liquidity got tighter. Sam Bankman-Fried, but the real liquidity got tighter is in 22. Powell started upping rates, and this was right around here, and gold kind of had a little left in it, but then it came down. Bitcoin came down much, much more. So what this chart shows you, I believe, is just how sensitive, how much more volatile Bitcoin is, but they both are moving in the same direction, and how in general, gold has been a leading indicator of Bitcoin. Now, if I take this thing up here, and sadly, this is not updated. This chart's a little bit old. But the gold nut line, you can see it goes up to 3,500 here. Well, of course, it should go right off the chart because it's been as high as 4,400. So again, the gold line has moved and Bitcoin is kind of pinned at 100, 110, something like that. So my sense is that Bitcoin is going to wake up and it's going to move hard. Mapping it against the NASDAQ's tricky. I think they're two different things, but they both are driven by liquidity. I mean, one thing that is very true about Bitcoin is it's a liquidity-driven thing. And it also has some portion of the Bitcoin demand is all the other altcoins and all the other cryptos, which I think are nonsense, to be frank. And so, I try to avoid those coins and I just focus on Bitcoin. And I think that, I do know that there were people on Wall Street who were doing something along the lines of they were shorting Bitcoin, or shorting Bitcoin and going long the NASDAQ, which I think is a colossal mistake. But because the two, they were correlated, they thought that was a good pair trade. I suppose people could see that and believe it. I personally don't think it makes any sense at all, but it is what it is. Notice same chart as before, Bitcoin and gold. Gold in this case is white, and the Bitcoin is orange. And if you lag the two, what you see is that again, they match up better. They match up more closely when you do a 100-day lag. And so again, over here in 2025, what we've seen is, as we all know, in September, gold really broke out and went on a tear. It went up to 4,400. Bitcoin's just sitting right here. But that means it's pretty, in my book, it's pretty close to probably following through. So I just think it's another interesting data point about, the trend on both the assets. And I mean, the important thing, David, I know you understand it very well because it's the area you cover, is that what's happened is the world has become very aware of this monetary debasement trade. You see JP Morgan talking about it. I mean, I was shocked to see Morgan Stanley changing their allocation. They were 60% stocks, 40% bonds. Now they're recommending 60% stocks, 20% bonds, and 20% gold. And I was like, wow. I mean, they manage trillions and trillions of dollars. And so you're seeing a growing awareness of what those of us in the sound money community have been saying for, decades, but most particularly last few years, which is they just can't stop printing money. And, we're now seeing, as we move into current events, and I'm sure we'll talk about this, we're now seeing all kinds of indications. I mean, Powell at the recent press conference said the money, the balance sheet would have to grow. Lori Logan, one of the Fed governors, she said indeed the balance sheet was going to have to grow. I mean, this is really QE. Now they're not calling it QE. They're just saying, well, we're just expanding it to make the plumbing work. And, okay, that's a nice excuse, but let's face it, it's money printing. So, the market has figured that out, and that's why gold and silver and Bitcoin prices have been so strong. I think what's happening here is that, the government and everybody has kind of come to realize that to keep the economy going, we have to keep all these numbers going up and to the right. And that means both the stock market, it impacts, gold, silver, and Bitcoin. The bond market, meanwhile, is, in my belief, going to have a fit over this eventually because, I mean, the bond market's been calm because there was a time, they were reducing their balance sheet and they were trying to maintain discipline, with higher interest rates. But what we're seeing, I mean, we know that Powell is out in May of 2020, next year, 2026. And so, yes. And we know that, I mean, it was amazing to me. I mean, you got the president of the United States calling him a moron, and an nincompoop. And saying he's too late, and I mean, just kind of beating on him. And he's going to appoint somebody who's going to drop rates, and that dropping of rates will lead to all kinds of refis and another round of inflation. So this is mapping. I think in our last conversation we did talk about this. This is really kind of mapping out against the 70s. It's very similar, right? Where you have these waves of inflation, and the Fed tries to fight them, but then you get the next wave. And so, I think that's what's going on. As for the stock market's a very tough thing to call. I mean, it's not cheap by any measure, but there are those who argue that there are new measures and new metrics are appropriate in this free money world that we kind of live in. And they may be right. I mean, I've lost money trying to be short the stock market at various times over the past 10 years. I regret doing that. I didn't understand what was going on. So, I would not be shorting stocks here, but that doesn't mean I'd be buying them either.
Gold often signals the shift, but Bitcoin represents the high-velocity disruption. When gold often signals the shift, but Bitcoin represents the high-velocity disruption. When capital floods the system, Bitcoin doesn't just appreciate, it sees parabolic moves. The typical sequence is gold rises first, indicating macroeconomic uncertainty. Then Bitcoin follows, but with extreme speed and enhanced volatility. The current lull is deceptive. It precedes a large move. Institutional flows are improving, central banks remain expansionary, and Bitcoin is still gathering steam. Astute investors are accumulating now, understanding that Bitcoin's awakenings are sudden and characterized by explosive rallies. Bitcoin stands alone in its class, built on immutable principles. Unlike assets reliant on shifting governance or marketing cycles, Bitcoin is fundamentally anchored in cryptography, decentralized consensus, and proof of work. Its true value lies not in future projections, but in its robust, unchangeable protocol. As confidence in sovereign currencies wanes and fiscal irresponsibility continues globally, the migration towards truly hard money accelerates. Digital scarcity is paramount. Trustworthiness is critical. When traditional financial structures falter, capital will flow instantly to the system where the rules are guaranteed and cannot be arbitrarily changed.
I get that other people are trying to do projects that enhance, functionality, and Ethereum has contracts and smart contracts, and people are trying to tokenize things, and all those. That's all great. I mean, there's to the degree that you can use cryptocurrencies to do things, to tokenize things. That's got value. I don't dispute that. But what I'm trying to point out is that there's really no cryptocurrency, or none of any size. There are a couple of small projects that are similar. There's no cryptocurrency of any size that has the proof of work and the network scale and the immutability of Bitcoin. I mean, Ethereum's, monetary policy has changed 7 or 8 times. I mean, all these other coins have somebody leading them who's kind of quote unquote the CEO. I mean, one of the beautiful things about Bitcoin is it's distributed and there is no CEO, and it's all based on consensus, and it's all based on, nodes and miners and people voting on what they're going to use. And so, you could hard fork Bitcoin and try and say, I'm going to go over in this direction, and fine, but nobody would follow you because everyone's going to stay with the one that's the leader. So yeah, I just think a lot of the other projects, some of them are just outright scams, right?
Sure.
I mean, we had Sam Bankman-Fried, we had, Alex Mashinsky, we had Monero. I mean, there were just a lot of very, very bad actors who would spin up a coin, try and sell it, run the price up, and then they would dump their coins and take money from people. And that was just criminal behavior. The SEC's tried to crack down on that, but some of that's still going on. I mean, even guys like Elon Musk support something called Dogecoin, has no notable use case, and yet it's still got a multi-billion-dollar market cap. It puzzles me. But to me, Bitcoin itself is actually a technology. It's an invention. They solved a problem, a computer science problem that had existed for a long time, that other people tried to solve, which is how do you trustlessly secure digital information so that it can't be cheat. You can't cheat. You can't double spend. And it's called the Byzantine generals problem. And Satoshi, or whoever the Satoshis were, they solved it. And in the beginning, I was quite skeptical. I thought, no, that's not possible, because there were 3 or 4 other prior experiments where they tried it and it didn't work. And so, but here we are. We're 16 years into it. There are 920,000 plus blocks that have been mined, and and it's been adopted, and more and more people are coming to the conclusion that what, this is immutable, and this is a scarce entity, and it is a scarce ledger. And it doesn't necessarily have to be physical the way gold guys think that if it's not physically sound, it can't be money. Some people make the point about that same point about Bitcoin that it can't be
Yes.
quote unquote sound money. Yeah, I like to turn that actually on its head and say, is it gold going up or is it the dollar going down? And the same, and the same with Bitcoin. And I think that, I think the reason I define sound money is money that is not issued by the government, because we all know the government can print more, and money that has a fair set of rules around it. And, gold is geologically constrained, and, you can't fake an ounce of gold, although people have tried. And Bitcoin is mathematically constrained. Those sound monies with limited supply outside of the government system, in my opinion, those are the only sound monies that exist. Now, compared to fiat money, the government's money, they might, the prices might fluctuate a lot, but I actually think that's more of a commentary on the fiat than it is on the sound money. I mean, 1 ounce of gold is 1 ounce of gold, one Bitcoin is one Bitcoin. I think the reason the prices have been so volatile in this transition period here is I think we're going through a period where fiat is really being questioned. And, you're now, we got, I mean, I like to liken it to like we're in a theater and there's a little bit of smoke and a few people are like, whoa, hang on a second, I want to get out of here. And pretty soon everybody's could figure it out. And, I mean, a lot of people think the price of gold at 4,000 is high. I don't. I think it's low. I think gold's going to 10,000, 20,000, 50,000 because that's how much fiat money has been printed. In the same way that I think Bitcoin is going to much higher prices too. So to me, the volatility is more a comment on the loss of faith in the fiat system. I mean, if you look at a chart of what happened in any great hyperinflation, it always starts out slowly, but then over time, money is a confidence game, and if it comes to the point where we all lose money or all lose confidence in the money, it's gonna fail very quickly, and so and it'll be very volatile. I mean, I'm sure you've seen the Mermican Capital chart that shows the volatility, right, during Weimar. The bet that I'm making, and the bet that those of us who are betting on these alternative currencies, and that's really what they are, because the dollar is the leading currency still, despite the fact that it's slipped, is that the market's bigger than the government. And if people, it's called Gresham's law, right? If people continually lose faith in the government's ability to control the printing of their paper, then they're going to select these other forms of money, and pretty soon nobody will want the dollars. And we all have seen the stories of Venezuela where the bolivar was just laying around in the streets because they're worthless. And so, we're not anywhere close to that. I don't think that's not even a tail, it's a remote tail case. But my point is that great inflations have occurred when governments have misbehaved. And I think that what's going on now, and this is reflected in the JP Morgan comments and others, is that more and more people are coming to realize that the government is really behaving responsibly or irresponsibly, and that quote unquote irresponsibility is growing. Let me give you an example. So Trump got in and they established Doge, and it was a noble effort, the Department of Government Efficiency. And Vivek and Elon were going to go save, and Elon said, we're going to save $2 trillion. I mean, it's ridiculous. And they said, we're going to save $1 trillion. Well, that's still pretty aggressive and ridiculous. Well, now it looks like if you Google it or chat GPT it, it looks like they're maybe saving $100 billion a year, which is still a lot of money, but in the context of a 1.8 trillion deficit, it's not that much. And then in turn, the big beautiful bill, which just the Trump, Republicans just passed, increased the spending by 300 or 400, billion a month, or I mean a year. And now the tariffs are bringing in some money, but it's now, I read in the Wall Street Journal this morning, it's looking like he might lose the Supreme Court case on the tariffs. And I guess the point is that intelligent money managers are seeing that the government is just trapped and they just keep printing money. And it's actually kind of math, David. I mean, when you have a credit system that's based on debt and the debt is continually growing, if you don't grow the underlying supply of the money, the debt would default and you would have a big deflation like 1929. And so really they have to inflate. What they're hoping to do is inflate slowly enough that fast enough to keep the system together, but slowly enough that people don't revolt or don't complain or don't leave the dollar. And that they're kind of zigzagging back and forth. But and I mean, obviously they blew it. COVID came along, they grew the money supply 40%, inflation shot up to 9%, right? And then Powell said, "Holy shit, this is a problem." He slammed on the brakes, took rates up very quickly, and inflation's come from 9 down to 3. But even the 3 is not their target. Their target's 2. But now they're kind of saying, well, 3 is good enough for government work, and the financial system is seizing up. We got to cut rates again, and of course we're going to get another wave of inflation. So That's kind of how it works.
As macroeconomic uncertainty grips global markets, investors are increasingly turning to sound money assets such as gold and Bitcoin as safe havens in a storm of inflation, rate pivots, and weakening labor data. Gold's breakout above $4,050 and its steady climb toward $4,400 signal renewed demand driven by a weakening dollar and expectations of Federal Reserve rate cuts. Bitcoin, on the other hand, has held firm near $100,000, awaiting its typical explosive move when liquidity tides shift in its favor. The market is starting to sniff out another wave of monetary easing, and these two assets are once again front and center. This echoes what Lepard emphasized in his recent breakdown. While gold often leads, Bitcoin follows with more intensity. Gold's price action serves as an early warning system for inflation and fiat deterioration. Bitcoin, more volatile and liquidity sensitive, tends to react later but faster. In past cycles, gold made the first move, and Bitcoin erupted afterward. This time seems no different, especially as traditional institutions like Morgan Stanley shift toward gold in their portfolio. Recommendations and inflation expectations remain elevated. The recent breakout in the gold to Bitcoin ratio suggests capital is temporarily rotating back to gold, but the structural case for Bitcoin remains firm. As Lepard pointed out, Bitcoin's decentralized architecture, fixed supply, and resilience under pressure make it uniquely positioned in a world increasingly disillusioned with fiat. Whether the next leg up begins in gold or Bitcoin, both stand as stark reminders that monetary policy has consequences and sound money always finds its moment. As we wrap up, which asset are you betting on when liquidity returns? Bitcoin or gold? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.